Hello everyone, myself Manohar Mugli, I'm qualified CA and this is my first video in YouTube channel. Through this video, I will try to help you to take a decision, which is new tax regime versus old tax regime, which we need to opt, especially for salaried employees. In the month of April, every employee need to select which tax regime they want to go. Based on that, your boss or your employer will deduct the TDS, right? Let's discuss this topic through one PPT and one Excel sheet. Let's share my screen. So topics covered in this video are CBDT circular for salaried employees, general concern, and which tax regime is better, new tax regime or old tax regime, right? CBDT circular relating to financial year 23-24. It's saying that every employer will ask to the employees which tax regime they want to go, either old tax regime or new tax regime. Based on that, they need to TDS. Suppose after a certain time, employee is unable to identify which tax regime they want to go. Employer can go new tax regime by default, right? And general concerns can be switching options. Means in this year you are going old tax regime. Can you go new tax regime in the next year? Answer is yes. Yes, for only salaried employees. If you are any business owner, any partnership firm, any HUF, you don't have that option. This exemption is allowed only for salaried employee. And next concern can be change during the year. Means you selected in the month of April old tax regime and your boss deducted TDS every month based on old tax regime only. At the end of the year, means in the month of March or while filing the ITR, you thought that new tax regime only can save the more tax. Can you go for new tax regime? Yes. While filing the ITR, you can select new tax regime and can file the ITR accordingly, right? And after filing your ITR, you can get the tax refund to the amount whatever you paid extra. Clear? Now, which tax regime best? So you decided you want to select old tax regime or new tax regime. Which is the best for you? Is there any specific rule like that? I mean, means if your salary is less than 10 lakhs, new tax regime better. If your salary more than 10 lakhs, old tax regime better. Is there any rule like that? No. There is no specific rule like that. It's completely based on your projected investments or your savings. Projected. Why projected? Because we are taking the decision in the month of April. That means we are expecting the future investment in this coming year. Means April 23 to March 24. What is the investment you are planning? What are the savings you are planning? Right? And one more important factor is your salary break. If you see your salary, you see basic, DA, HRA, and other allowances. Other allowances can be Sodexo, gratuity, LTA, right? Every allowance have different applicability, and portion of that amount is allowing as a tax exemption, right? So based on that, your tax liability will differ. Let's check with the help of the Excel sheet, right? This is the Excel sheet. Here we need to fill up the green highlighted cells. So all are formula based only. So if you see the columns, particulars, amount rupees, calculated rupees, maximum limit. This maximum limit column will see the maximum amount relating to the particular deductions. What is the maximum limit? Suppose assume that ATC. ATC 1,50,000. That means if you contributed more than 1,50,000 also, you can get the maximum exemption 1,50,000. Right? You need to fill up the green highlighted cell. This Excel sheet I will share in the description box so that you can download and you can update your information. And once you update it, you can see the what is the tax liability as per old tax regime, tax liability as per new tax regime. Clear? Right. So let's update one by one. So your age, first is your age and your parents' age. Why age is important? Especially it is important for medical insurance and 80DB. What is that? Let's see below. We have to update what is the gross salary. Assume that you have 12,50,000 or 13 lakhs is the gross salary. Right? Sorry, 1,30,000. 13 lakhs is the gross salary. And standard deduction 50,000 as per the recent budget. This standard deduction allowed for new tax regime also. And this is the only deduction you can get through new tax regime. So net salary as per the new tax regime is 12,50,000. Right? So 12,50,000. And these are the tax slabs. This is the rate for the each individual slab value, tax liability. So total tax is 1 lakh and there is a cess 4%. So 1,04,000 your tax liability as per new tax regime. So you updated this information here 1,04,000. Now let's update the old tax regime deductions. Let's say the old tax regime. I mean to say that So here you need to update your exemptions and deductions, means your investments or your savings. First is the most important one, HRA exemption. Let's discuss through this separate sheet, HRA. Here you need to update the city of staying, where you are staying. It may be Mumbai, Kolkata, Chennai, Delhi, or other places. Let's see other places. And you need to update the what is the basic amount. Assume that you have the basic plus DA together 4,50,000. HRA received 5 lakh, not 5 lakhs, 3,50,000. And you paid rent approx 20,000 per month. That means 2,40,000 per year. That means once you update all these four information, we have separate calculation for this. Lower of this amount is the HRA exemptions. Means HRA received is 3,50,000. Out of that 1,80,000 is exemption. So let's update this exemption here. So since it is a formula based, 1,80,000 is updated here. So that's a meals coupon. So you know that, right? So 26,400 is the maximum allowed. Maximum allowed. Suppose your boss given 35,000 per year. 26,400 only is the exemption. The remaining portion will be taxable. Other tax-free allowances and reimbursement based on your salary, you need to check what are the allowances are there, how much portion you can get the exemption. Okay, professional tax 200 per month. Every employee maximum limit 200 per month. That amount you can see in your payslip also will deducted by the employer on behalf of you. So 2,400 altogether a year. So that's the reason maximum limit. Suppose some employees will get 150 is a deduction, 1,800, 150 into 12. How much? 150 into 12, 1,800, right? Okay, right. 1,800 they can get the deduction. Interest on house loan. Assume that you have taken the house loan, you are paying the interest every year. In this year, you will pay approx 2,50,000. 2,50,000. Since the maximum allowed is 2 lakhs, you can get the 2 lakhs only. Even though if you paid excess of 2 lakhs, you get the maximum 2,50,000. Next, deductions. So ATC is one of the important deduction. I think majority of the people know that. And here we have n number of things we can invest or we can save. Life insurance premium paid. Assume that you paid 15,000 life insurance premium. ELS, one of the mutual fund, tax saving mutual fund. Assume that you are paying 3,000 per month, 36,000 you are investing. Tuition fee for children, maximum of 2 children, you can get the exemption. Assume that you are paying tuition fee for your children 60,000, 30,000 for each. Assume that EPF, every month your boss is deducted only employer contribution, you get the deduction. Assume that your boss is deducting every month 4,000 or 3,000 every month, 36,000. And this information you can get through payslip or your salary breakup also they will mention. National pension scheme, national savings certificate, Sukanya Samruddhi. Suppose you have girl child and you want to contribute or you are contributing every month 2,000 or 3,000 every month. So 36,000. Tax saving fixed deposit and principal on home loan. Since you have taken the house loan, you will contributed some portion of amount relating to principal to the bank, right? So assume that you are paying 60,000. So altogether 2,43,000, but the maximum allowed is 1,50,000 only, right? And 80 CCD 1B, you have taken any national pension scheme, the maximum allowed is 50,000. Assume that you have taken 36,000 value, right? Medical insurance, health insurance premium for self and for your parents. For self means for you and your family, means your spouse and your children. Assume that you have taken medical insurance for 25,000 rupees. For parents assume that you have taken 35,000, right? 25,000, 35,000. Since the maximum allowed is 50,000 for your parents, since your parents age is 61 years, right? Assume that your parents age is 59 years. So the amount will change it as a 25,000, right? And 80 DDB are the special deduction for the medical or health insurance expenses, right? So whether you are applicable to these sections or not, check the applicability. Interest on higher education. If you taken any loan for higher education, whatever the amount paid for interest, that amount can get the exemption, and there is no limit for that. Suppose you have taken loan for your kids, maybe 20 lakhs. 20 lakhs every month you need to pay 4,000 interest. 48,000 you need to pay, right? 48,000 you will get the exemption. Additional interest on house loan. This house loan interest 1,50,000 in addition to 2 lakhs. right? Assume that you are paying 50,000 in excess, right? 2,50,000 you mentioned, so 50,000 you can claim that deduction. But whether it is applicable to you or not, check the applicability section, applicability sheet. 80 EEB, interest on electrical vehicle loan. Electrical vehicle loan, I mean, electrical vehicle can be two-wheeler or four-wheeler. Any interest paid for that, you will get the exemption, and 1,50,000 is the maximum limit. 50,000, assume that you are paying 50,000. Other deductions, if you have any political deduction, I mean, political contribution or donation like that, you can get the deduction, right? So altogether, exemption and deduction together 7,92,000. So taxable income as per old tax regime is 4,57,000. So let's check the tax liability on 4,57,000. 4,57,000, and these are the tax slabs. These are the rates for individual slab. This is the tax liability 10,800. Since it is a 5 lakhs less than 5 lakhs, you will get the exemption as per rebate under section 87A. Assume that you don't have these things. Interest on higher education you don't have, and additional interest on house loan you have assumed that. Interest on purchase of electrical vehicle you don't have, and NPS you don't have. Medical insurance you have taken only for you 15,000 and your family 15,000, right? So the total exemption deduction together 6,38,000. Now taxable income as per old tax regime is 6,07,000. Let's see, 6,07,000 taxable income, and your tax liability is 36,000. 36,000. Tax liability as per old tax regime is 36,000, whereas new regime is 1,04,000. There is a huge difference, right? So that you can identify which is better for you. Old tax regime is better for you in this case. Based on that, and based on this Excel sheet, you can update the information relating to you, your investments, your salary breakup, HRA exemption, all the information update in the green highlighted cell, so that finally you can see which tax regime is better for you, old tax regime or new tax regime, and the difference between these two. So while selecting the correct tax regime, you are saving 67,000. Assume that at the end of the March month, means at the end of the next year, March month, you don't have these investments, you have only few investments, the tax liability will differ accordingly. So if you think new tax regime is better for you, while filing the ITR, you can select for the new tax regime and file the ITR. And once you file it, you can get the income tax refund, whatever the amount you paid in excess, right? Hope this video is helpful for you to take a decision. If you have any doubt, mention in comment box so that we are happy to help you. If you think this efforts is helpful for you to take a decision, hit the like button. If you think this video is helpful for your family or your friends, share this video. And if you want to see more updates like this, subscribe to our channel. That's it, friend. Have a good day. Bye bye.